Welcome to the Daily Business and Finance Show. The stock market correction is far from over, warns IBKR, while Ford Motors earnings miss expectations with a non-GAAP EPS of 47 cents and automotive revenue falling short by $70 million. The NBA opts for Amazon over Warner Bros. Discovery in a new deal, and credit card balances past due hit their highest level since at least 2012 according to the Philly Federal. Chipotle Mexican Grill surpasses earnings estimates with a non-GAAP EPS of 34 cents and revenue of $3 billion, but Hawaiian Holdings faces turbulence as the DOJ may block its Alaska Air deal. Bausch Health plummets amid potential Chapter 11 bankruptcy rumors, while Celestica beats earnings expectations with a non-GAAP EPS of 91 cents and revenue of $2.4 billion despite Vertiv stock falling even after an earnings beat and outlook raise. Stay tuned after this short ad break to learn more about these headlines. U.S. equity markets faced significant pressure as tech stock sell-offs led the S&P 500 and Nasdaq Composite to their worst sessions in over a year. Disappointing quarterly updates from Tesla and Alphabet caused the Nasdaq to drop 3.6% and the S&P 500 to fall 2.3%. Despite recent declines, the S&P 500 remains up about 14% year-to-date but may see a correction of up to 15%. The narrowing yield spread between 2-year and 10-year Treasury notes is also a critical market factor, potentially signaling further volatility ahead.
Ford Motor Company reported second quarter earnings per share of 47 cents, missing estimates by 21 cents. Automotive revenue was $44.81 billion, slightly below expectations. Full-year adjusted earnings before interest and taxes remain unchanged at $10 to $12 billion, while free cash flow outlook increased to $7.5 to $8.5 billion. Shares fell 1.7%.
The National Basketball Association rejected Warner Bros. Discovery's attempt to match Amazon's $1.8 billion offer in a new 11-year, $76 billion media deal with ESPN, NBC, and Amazon. The NBA prefers a streaming-first partner like Amazon. Warner Bros. Discovery stock fell 2.2% post-market after the announcement.
The Federal Reserve Bank of Philadelphia reports that credit card balances past due hit their highest levels since 2012. In the first quarter of 2024, 2.59% of balances were over 60 days overdue, up from 1.93% a year earlier. New card originations fell by $5.6 billion from the previous quarter and mortgage originations hit a series low at $44.4 billion. Relevant companies include American Express, Capital One Financial, Discover Financial Services, Citigroup, Synchrony Financial, Bread Financial Holdings, JP Morgan Chase & Company, and Bank of America. In other news, the U.S. dollar and Japanese yen extend gains. Bill Dudley suggests Federal Reserve rate cuts could start in July. New home sales slipped by 0.6% in June with stable prices compared to May.
Chipotle Mexican Grill reported second quarter earnings per share of 34 cents, beating estimates by 2 cents. Revenue rose to $2.97 billion, up 18.3% year-over-year, surpassing expectations by $30 million. Comparable restaurant sales increased by 11.1%. Operating margin improved to 19.7%, and the restaurant-level operating margin reached 28.9%. Chipotle opened 52 new restaurants, including international locations and those with drive-through lanes called Chipit lanes. For 2024, Chipotle expects mid to high single-digit comparable sales growth and plans to open up to 315 new restaurants with over 80% featuring a Chipit lane. The company anticipates an effective tax rate between 25% and 27%. Shares rose by nearly 7% following the announcement.
Hawaiian Holdings shares fell 7.4% after reports indicated the Department of Justice is unlikely to approve its $1.8 billion sale to Alaska Air. The antitrust regulator may challenge the deal, with no enforceable remedies offered by the airlines. A final decision is expected by August 5th.
Bausch Health shares dropped 44% after reports of potential prepackaged Chapter 11 negotiations to reduce debt. The pharmaceutical company is discussing in-court restructuring with lenders, which may involve extending first-lien debt and converting unsecured debt into equity. Talks are ongoing, and no plan is finalized yet.
Celestica reported second quarter non-GAAP earnings per share of 91 cents, surpassing estimates by 9 cents. Revenue reached $2.39 billion, a 23.2% year-over-year increase, beating expectations by $140 million. Analysts suggest buying Celestica stock before the earnings release due to its strong performance and promising artificial intelligence pivot.
Vertiv stock dropped 11% despite exceeding second quarter expectations and raising its 2024 sales forecast to $7.67 billion. Organic orders surged 57% due to strong demand. CEO Giordano Albertazzi highlighted the firm's readiness for increased AI deployment. Oppenheimer maintained its outperform rating, with third-quarter earnings per share expected between 65 cents and 69 cents, and full-year outlook at $2.47 to $2.53 per share. Thank you for tuning into the Daily Business and Finance Show. Stay informed, stay ahead. Join us next time for more insights and updates. Goodbye. I'm Montgomery Jones.
And I'm Amalia Dupre. See you later, until tomorrow comes around. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.